At the end of the last financial year, Growthpoint put to the market that we should do between 7 and 7.5% growth for the year to June 2015. At the half-year mark now for the 6-month period to 31 December 2014, we've come out with 7.5% growth in distribution at the upper end of that guidance range. In the main, I think driven by performance from the South African portfolio, pretty solid performance from the South African portfolio, driven by the acquisition of the Tiber and AppSec portfolios. And that's given a pretty big boost to the overall growth numbers in both revenues and profits. The retail sector of the three sectors in South Africa, retail, office and industrial retail, probably performed the best with 7.7% like-for-like growth in revenues, or net property income rather. The office sector doing about 6%, and then our industrial sector having been impacted negatively by exposure that we had to Ellerins out of that Able group, the demise of Able. So we had 46,000 square meters of industrial space that became vacant, and has had a slightly negative impact on the performance of the retail sector. All in all, though, South Africa did pretty well. The Australian portfolio, our business in Australia, we've got 64.5% of Growthpoint Properties Australia separately listed in Australia. It's got about $2.2 billion of assets. Good performance from the Australian entity. On target also in terms of its distributions and profit outlook. And we look for continued strong growth from the Australian entity. This particular set of results also positively impacted by the weakening rand against the Australian dollar. Like-for-like distribution growth out of Australia was over 12%. And then lastly, the performance of the V&A waterfront coming through very strongly. Good exposure there to the tourism sector, and total distributable income growing at 9.3% from the V&A waterfront. Very exciting time at the waterfront, with a string of new developments in excess of 3 billion rand worth of new capital committed to further developing the V&A waterfront over the next 2 to 3 years. On the funding side, liquidity remains good in the debt markets, so banks and funders, life companies are generally still pretty keen to fund Growthpoint, and challenging debt capital markets though at the moment, where again post the demise of Able, some of the debt capital market investors are a little bit skittish, but we are fortunate that we have alternate sources for debt funding. And lastly, the equity capital markets remain pretty strong. I think most listed property companies are trading close to all-time record highs, Growthpoint being no exception. And we look forward to another strong 6 months. We gave guidance for growth for the full year to also be in that 7 to 7.5% range. And we just hope that the South African economy can improve or show some improvements that will help the South African business along, as it's a little bit weaker than the Australian entity as well as the V&A waterfront.